How do the wealthiest people in the world invest? Stocks, yes. Bonds, yes. Real estate, yes. And direct ownership of private assets, yes. Sometimes the biggest growth stories in the world start private before going public, but a lot of those private companies would rather stay private. Let's take a look at some of the pros and cons of owning and investing in both public and private markets. Public companies are public, meaning they have to share what they're up to on a consistent basis, which helps avoid surprises and price shocks and helps people always know what they own and why they own it. But private companies don't have to disclose nearly as much, which sometimes can be an advantage. It helps management follow their own true north rather than the whim of the general public. But that opacity often introduces more risk to the everyday investor. And private markets are usually illiquid, meaning you can't sell and get out whenever you want. And at the end of the day, most private asset products aren't designed to beat the stock market. They're sold as less risk than stocks, but better than bonds. And from our experience, by the time the business cycle comes and goes, you might have been better off just owning stocks and not dealing with the extra hassle of private markets. Recently, there's been this big push to gather assets into space, and in all my years in this business, whenever I see a glut of product placement, it can be a bit of a red flag. This spring 2025 McKinsey study was an early example of scrutiny, and by the fall, it was a chorus of concern, something we'll watch closely in 2026. But for now, just ask your advisor if you own any and why. Reach out with questions anytime. We're here to help you grow your wealth, minimize taxes, and keep your money ahead of your goals. Vista Way Advisors, your wealth, your way.